Hello and welcome back to the Yoga Teacher Collaborative podcast. My name is Laura Green and I'm delighted to be doing a guest special with you. And this really feels like a public service community announcement today, as it is not the sexiest topic, but it is an essential topic that is highly likely to affect the majority of us. So whether you're listening to this in the car, whether you're listening to this onto a walk, make sure that you get some time to take some notes down from today and action what we are talking about, because today we are talking about the upcoming accountancy changes of making tax digital, which will be affecting how we pay our tax, report things to HMRC. So I am absolutely delighted to be joined by the fabulous, many of you probably know her already, Jessica Garbett from Yogi Tax, Whitefield Tax. Jessica and her team have been looking after my accounts for, I don't know, I'd say over a decade. I'm not sure right now. And Jessica runs a wonderful practice. And as an accountant who has founded these accountancy practices, Jessica is also a yoga teacher and a lover of yoga. And I really feel that you help and support us as yoga teachers from the depths of your heart. And we are eternally grateful to you. I don't know how many Facebook groups I see you get tagged in as we have all our needy questions. So you've kindly given some time for us today to answer a whole load of questions on making tax digital and get ourselves clear on that. So Jessica, welcome. Thank you so very much for joining us.
Good afternoon, Laura.
So I am sure you have spoken about, written about, blogged about a lot already on making tax digital, as this is something that the government have been talking about for a long time. But I'm equally sure we have some podcast listeners today that might yet have never heard of the phrase making tax digital. So for those that have never heard of it, what is making tax digital and what are we talking about today?
Right, so making tax digital is an upgrade to the current self-assessment system. Two requirements really. Requirement number one is if you are caught by making tax digital, and I'm sure we'll go into that in a moment, then you will need to keep your accounting records digitally, which could be on a spreadsheet or it could be, for most people, using an app. The second change is you must then report that information quarterly to HMRC by way of uploading information on a quarterly basis.
Okay, so that is two really significant changes for some people. So I know I have been used to filing my accounts annually, doing my self-assessment annually. Most of us have it on our to-do list over the Christmas period into January to hit.
Please do it earlier than Christmas.
I do. Mine's done, but that's because you are my accountant.
It needs to be done in the summer, but anyway, yes, okay.
Yes, mine is done because your wonderful team took after me, but I know from my friends a lot leave it till Christmas and January time to meet that January annual deadline. So a big change now is this is now a quarterly deadline. So that means we need to report.
Sorry, it's worth pointing out, Laura, that the quarterly submission should come directly from people's software, and it's not a full self-assessment. So it's a snapshot.
Yeah. So once a quarter, we have to give a snapshot directly from accountancy software, or excuse my cat, to HMRC.
That's correct. Yes. Yes.
Okay. And then do we need to pay accounts quarterly now?
No,
or is it just
all your payments will at the moment be on the same timetable. Nothing changes there. So basically 31st January every year with a payment on account in July, if that's triggered.
Okay. So to try and help us understand, what is the purpose from the government point of view of bringing in this quarterly reporting?
Well, that's a good question, because the latest information suggests they've got no facility to use the quarterly reporting at all. So it's going to go in a black hole. If you look at the wider project, it is about shifting some of the processing work from HMRC to the taxpayer. HMRC gets more systemized data. It's also about improving the quality of small business records by mandating digitalization and hopefully although it remains to be seen, reducing some of the black economy, people who aren't paying taxes.
So no more paper written notes and receipts hidden in shoeboxes.
Pretty much, yes.
Okay.
And, you know, I mean, as you said earlier, I'm a yoga teacher as well. And when I first started teaching yoga, I've been an accountant for what, 35 years, 40 years. And it was a real revelation working with a cash business. And, you know, it's probably make people laugh, but I'm sure we've all been there. You know, it will be the evening, you'll get changed, have a shower, and £10 note falls out your bra. Where did that come from? And so, yeah, it's starting to do a mindset change with all of that.
Yes. And I think COVID created a mindset change on a lot of that.
Yeah.
I know I was hugely a cash business before COVID. And then when COVID came in, I moved over to Stripe and being able to take payment electronically online. And now I rarely see any cash in my business.
Exactly the same. I'm in the same position as well. And of course, again, when I started teaching yoga a decade ago, most of us didn't have booking systems. Now most of us have got booking systems. And that's another big change as well.
Okay, so so if we look at the legal structures that yoga teachers run through and who this might be applicable to, so I'd say the largest proportion of yoga teachers are self-employed and might in addition have another job that is PAYE. Then we've got the full self-employed yoga teachers with no other income. And then we've got less yoga teachers that run their own limited company, but are limited companies rather than self-employed. And then we'll have a tiny proportion of yoga teachers that run limited companies that are also VAT registered. So let's start with the self-employed yoga teachers that are also PAYE elsewhere.
Okay. Well, it will potentially affect them. So in fact, it's probably easier to take a step back on that, Laura.
Yeah.
Obligations under Making Tax Digital are triggered. So in fact, I'm going to go back a step even further, and let's just be clear on terminology, because you mentioned yoga teachers with companies who are VAT registered. And do, of course, bear in mind that you could be a sole trader and be VAT registered. The VAT threshold isn't just for companies. But Making Tax Digital has been in place for VAT for some years. And it's important to mention that because if you go searching for information on Making Tax Digital, a lot of it will be about Making Tax Digital for VAT. And I think that came in, I'm going to say about 2017-ish, something like that. 2019, I've just checked. So MTD for VAT has been there for a while. MTD for self-assessment is the next bit.
Yeah.
So who does it affect? It affects you if, as an individual, you receive income from self-employment or renting a property.
Okay.
Now, it doesn't matter if you've got an employment on the side. So a self-employed yoga teacher who is solely a yoga teacher or part-time self-employed and a part-time job, they're caught potentially in the same way.
Okay.
If you have a limited company, you are not caught by it. But many yoga teachers actually have a limited company and a sole trader. And they do that because perhaps the company does retreats and trainings and the sole trader does classes. And in which case the sole trader is caught. Equally, if you're a yoga teacher and you have a company, everything goes through the company, but you've also got buy-to-let, that buy-to-let is caught. So the triggers, it's not so much about the structure you've got, it's about whether you receive self-employed income as an individual or rental income as an individual. And individual excludes companies, excludes partnerships.
Yeah. And is there any earnings threshold on that?
Funny you should ask that. Yes, there is. So the trigger for phase one is combined self-employment income turnover or rents, and the two are added together, of over £50,000. So if you had £20,000 from teaching yoga and £35,000 in rental income, then its total is 55,000, and you're caught in the first phase from April next year. And those are gross figures. So even if you've got expenses taken off, that's not relevant. It's the top.
I'm just going to come back on that again
because
I know that's very, very easy for you, but I just want to really stress
that's fine. That's fine.
That is every single penny that comes into your business, if that is totaling £50,000, then you are hitting that threshold. So
That's
coming
right.
into you, irrelevant
right.
of, oh, but I'm only keeping £20,000 profit because I'm paying my whole hire and buying props. It's on every penny a student or a rental income pays to you, if that's hitting £50,000,
That's
which,
correct.
you know, a lot of yoga teachers will be in that threshold.
That's correct. And it's worth also bearing in mind that the first wave, £50,000, applies from April 26, but it's assessed based on your 24-25 income. So if you're close to £50,000 and sitting here today thinking, oh, I just stopped working for a month, the ship sailed.
Okay. Okay. So even if you were going to earn less from April 2026, if you earned up to and over £50,000 in the 2024 to 2025 preceding tax year, you
You're now in it.
do.
You're now in the club.
Yeah. And would someone get to come out of the club later?
They have to have 3 years below the threshold. Now, the threshold is steadily reducing. I'm sure we'll touch on that in a minute.
Yeah.
But as the threshold reduces, it's coming down to 30,000, then 20,000. To get 3 years below the threshold means 3 years below 20,000.
Okay. And do you know when those next threshold phases are coming in?
Yes, I do. So April 27, the threshold drops down to 30,000. And that will be based on 25-26 income. So if your income at the moment is about is looking to be about, say, £31,000 for this year, you could stay out of this for an extra year by taking a couple of weeks off.
Yeah.
Is it worth it? Probably not.
Yeah.
And then from April 28, it drops down to 20,000.
Okay. So really, very soon it's going to be affecting, when we're remembering that this is turnover, every penny that anybody has paid you for yoga and or rental properties. If it's hitting £20,000, then very, very soon in the next few years, you're going to be hit by Making Tax Digital.
That's correct.
Okay. Now, you said, you know, if maybe you want to stave it off for another year or so, maybe don't teach a month, but is that worthwhile? Probably not.
No,
Why would,
I don't think it is. But
yeah, why could someone be potentially scared about this change or intimidated by this change?
Uh, why would they be scared? I think potentially the obligation to keep records digitally if they're not digitally savvy. And I mean, there's a paradox there. Probably most people listening to a podcast like this are digitally savvy, but a lot of people won't be. So that's one thing might scare them. Could just be a general fear of bureaucracy, fear of having to comply. Again, many of us, most of us, are quite stoical, should we say, about complying with taxes. We don't enjoy it, but it's got to be done.
Yeah.
I've worked over the years with people who've literally got a fear of brown envelopes. You know, I remember years ago, somebody I worked with, not a yoga teacher, different profession, but they would actually break out into a sweat and burst into tears if a brown envelope came through the door. And they admitted to me they're just scared of brown envelopes. So
Yeah.
people wouldn't want to do this because it makes life more complicated.
Yeah. I think the fear from me is not understanding and making a mistake,
Yeah.
and an additional admin for me. Okay. So when we're talking about keeping records digitally, now I am a spreadsheet girl. Even though your wonderful accountancy firm tried to get me to move over to software for many years, I use spreadsheets with complicated formulas that my husband made for me. Hopefully nobody is still pen and paper, but if you are pen and paper or spreadsheets, what are our options?
What are your options? Well, you can still continue to use spreadsheets. if you're using a spreadsheet, it has to connect to HMRC via what's called bridging software. And that essentially is some software that will link the cells in your spreadsheet and upload them quarterly to HMRC. So a spreadsheet is still possible. However, most people are moving towards software.
Yeah.
And there's various choices of software out there. A lot of people use something called Free Agent,
Yes.
which tends to be a market leader at the moment because it's the right mix of features versus price. But then
Yeah.
you could pay more and get more complexity. QuickBooks Zero, they're all popular. And there's going to be some simpler ones coming out as well, probably some free ones. But I would be really cautious about free software because nothing is free. Someone's paying for it.
Yeah. Okay. Um, and is there some that people can get connected with their bank account?
Yeah, so a lot of software will connect with bank accounts. So again, I mentioned Free Agent, which tends to be the one to beat. That will connect with most bank accounts. And in fact, if you are a customer of NatWest Group, which is Metal, NatWest, or RBS, then you can get Free Agent for free because the NatWest Group has a stake in the Free Agent software. Otherwise, it's a monthly fee.
Yeah.
Many other banks are introducing something. So the likes of Starling, Monzo, I think, are all going to have offerings for their own branded software. I'll be cautious about that because history shows it doesn't actually work very well. And banks are probably better staying in their own lane rather than trying to broaden out into software. But it will be there. And certainly most, if not all, commercial software will connect to a bank account.
And
Spreadsheet won't, of course, but
yeah,
most banks will.
you said, there may be simple free options coming out, but take care with them. There may be more banks bringing out softwares. This starts from April coming. Do you
Yeah.
suggest that people start, if they're not using something like Free Agent, Zero, QuickBooks now, would you suggest there's a time to wait and see what more comes out in the new year, or are
I
people best to
suspect,
embrace this now?
yeah, I suspect that the £50,000 threshold is still quite high for sole traders. A lot of sole traders, by the time they're up to £50,000, have become a partnership or a company anyway. So if you look at the number of people coming into this, £50,000 turnover from this coming April 26, is almost a soft launch.
Yeah.
And I would suspect that more software will come on stream during 26, 27, ready for April 27, when that much bigger rump of people with £30,000 turnovers hits. So
Yeah.
with that in mind, if you are in the first wave, because your 24, 25 income is over 50,000, I will be looking at sorting the software out now.
Yeah.
Either moving to a spreadsheet if you're not already using it, if you've got a spreadsheet, by all means continue with that, but make sure it can be connected via bridging software, or starting to use a software package.
Yeah. And do you think it's a good idea to then get familiar with that, learn it now?
Absolutely, absolutely. Yeah, do a few months trial. I mean, your first submission is going to be early part of July. So because this starts from 5th of April, so first quarter end is 5th of July. You're submitting, I think, by something like the 19th of July. You don't really want to be going live into that first quarter and still finding out the software works. So I would be saying to people, get going with it now from sort of December, January onwards to give yourself a bit of learning curve.
And if somebody is Excel and is reticent to move over to software, do you know any bridging softwares that you would recommend?
There's not any that I'd recommend. There are a few out there. We have been using one for some VAT clients who didn't want to go to accounts packages. I'll be absolutely honest, I don't know the name of the one we use, but it seems to work. What I do know is that our professional tax software is introducing a bridging feature. So clients could send their spreadsheet to us and we can do the quarterly upload.
Yeah.
Via bridging.
Yeah.
but it's a little bit like the Wild West out there at the moment. It's gonna shake down to a handful of trustworthy names.
Yeah. And I think that's
And
one of the things I've
sorry,
found quite, sorry.
can I have one other thing on
Yes.
that? It's worth noting that HMRC are not producing any software of their own or any bridging software. It is
Yeah.
to the market.
And that's was exactly what I was going to say. That's what I think I find conceptually quite difficult with this, is that it's something that's being mandated from HMRC and it's having a cost implication. Most probably having a cost implication. But
yes, but you see, now you're coming out of tax and coming into philosophy. It is taxation, but the back door, because what's happening is public services are being cut. So civil service roles in processing tax returns and tax paperwork are being cut. HMRC has been slimmed down. It used to be that HMRC had an office in every major town. They've now perhaps got a handful of offices across the country. And so gradually there's this movement of putting more stuff onto the taxpayer, which results in a smaller tax authority. So that's the background to that. And, you know, whether you're obviously, we've seen in recent weeks a lot of speculation about what's coming up in the budget this month. This is taxation by the back door. You know, you're not paying income tax, you're paying a tax for running a business because you've got to have some software and do your accounts digitally.
yeah, and I guess, you know, we know that about having our business bank accounts. Many of them come with a cost, and we just take it on the chin. And yes, bringing up that we've got the budget, I do not pay any attention to the budget. I don't listen to any news on the budget. I don't listen to the news as the budget comes out. I wait till I get your email, Jessica, which is normally within about 24 hours of a budget. You send through an email with, this is what it means to you, for you as a yoga teacher. So I refuse to listen to anyone but you.
Brilliant, bless you.
So then, just to finish off on that, different business structures, if somebody is not self-employed, but is a limited company that is not VAT registered, what is the situation for them?
On the face of it, making tax digital doesn't affect them. And we have been told in the past few months that there will not be a making tax digital for companies because it was on the long range sort of radar. So in principle, if someone works for a limited company, it doesn't affect them, so long as they haven't got a self-employment or rental income on the side. And if they've got a self-employment or rental income on the side, it will affect them.
That seems odd.
Why does it seem odd?
It seems like a small group of people get to escape this.
Well, the problem is that companies come relatively small, you know, perhaps 20, 30,000 pound turnover at the bottom end, of course, up to multi-million pound, very complicated businesses, and it's stratifying it. I would suspect that, I mean, you know, public services are still quite weak following COVID, the cost of living crisis, the Ukrainian war. If you look into the next Parliament, 2029 onwards, one would imagine that if the economy is picked up, things are more settled, they'll come back to looking at this and doing something for companies. But at the moment, I think it's in the too complicated box.
Is there anyone as a yoga teacher that might currently be self-employed that is on the threshold of it being worthwhile them opening a limited company? Is there anyone that this could actually be in favour for to go, actually, don't worry about it, stop being self-employed and open a limited company?
I would say no. So as things stand, and of course, in 2 weeks' time, this could all be out of date because we don't know what's in the budget. But as things stand, at the smaller end, the lower turnover end, you're going to pay a little bit more tax if you work for a limited company. And that's an interesting one because everybody thinks limited companies are this wonderful mythical tax saving tool. And I've even seen someone post on a yoga teachers Facebook group, I'd never be a limited company because it's tax evasion. But it's not. But at the moment, the way the rates are at present, it biases towards the self-employed. So if where we are now, as I said, for the first wave, £50,000 incomes, you're mandated based on 24, 25. So that ship has sailed. 25, 26, the ship has almost sailed now. So you're only really, the only client group who could really look at setting up a limited company and getting out of this are those with a turnover of less than £20,000.
Yeah.
In which case, it's going to cost them far more to be a limited company than anything they save in not having to buy some software, even if they pay a bookkeeper to do something for them.
Yeah. No, that's great. Thank you for clarifying that. Yeah. What is the situation if somebody runs retreats and say their income is spread out? Like, I know, I've got retreats in 2027 that I've taken deposits for already now in 2025. How does this affect someone if their income is spread over long periods like that?
HMRC are moving very strongly towards cash accounting. So everything is based upon when you receive the cash.
Yeah.
Now, that's called cash accounting, where you account for income based on the date it's received. And that is now the default way of doing business accounts. Businesses can opt for accruals accounting, which is when you match the income with the related expense. And if someone's doing a retreat only once every few years, maybe, and the income falls in one year and the expense in another year, then they'd have to use accruals accounting to get it to work. Otherwise, they end up paying a lot of tax one year, very little the next year. For most people, though, if they're doing a regular pattern of an annual retreat, something like that, annual training, they're going to be on cash accounting. So you simply account for the income when it comes in.
Yeah. Okay. No, thank you for that. Thresholds we've spoken about, tech we've spoken about, the admin. Any penalties, consequences, if anybody accidentally gets confused, forgets it?
It wouldn't be a tax system without penalties, would it? I have to say, I haven't got the penalty regime completely in my head at the moment, but they're going for a points-based system, and I think you accumulate a number of points, a bit like driving licenses. You accumulate a number of points, and if you get a number of points, you get a penalty, and the points stay on your tax record, I think, for its 12 months. I'd have to check that. I mean, hopefully people will get in the rhythm of getting it done. The people who are going to get caught are those who miss 2 or 3 of these, and it will start to mount up. It's unlikely that you're going to get penalised if there's a small error in the record keeping. So £1,000 wrong somewhere, you just correct it next time. Where the problem will be is if you don't have the software and don't submit quarterly.
Yes. Yeah.
Or you submit quarterly very late. That's when it's going to start to ramp up.
And if someone didn't know about making tax digital and they just think, don't worry, that brown envelope will come through the door telling me what I've got to do and when I've got to do it, is that going to happen?
There is going to be a brown envelope coming through the door, but it won't be till February time, and you'll have to start from April, so it doesn't leave you a lot of time.
Okay, so moving on, step by step from now, they need to work out, is it going to affect you from April 2026? Or is it more likely to be April 2027 or more likely April 2028? So you need to really look back at the accounts you have done and the accounts where you are in the year now and work out, are you at £50,000 or close enough turnover from your yoga and any other self-employed income and rental coming in, or at 30,000 or at 20,000? That will give you your timeline as to when you're looking for this to be affecting you. If you're in that £50,000 turnover bracket, work out what you're going to do for software now. Are you going to use a spreadsheet if you are really addicted to your spreadsheet and looking at bridging software? Are you going to go for a named known entity like Free Agent, Xero, or QuickBooks? I guess is probably a bit complicated and expensive for yoga teachers.
Yeah, QuickBooks and Xero, I think for most yoga teachers are a bit over the top.
Yeah, so probably look at Free Agent, work out if you can get access to it for free from your bank. Do you bank with NatWest or RBS or Metal? If you bank with somebody else, do they have a software and is it credible? And then start using that software for your record keeping now so that you feel confident in using it for when you'll have to do the first submission in July.
I think that's a good summation, Laura.
Okay. If you had one piece of advice, I know why one piece of advice is, but if you had one piece of advice, what would that be?
Understand it.
Okay.
So one of the things that's going to be happening is there's going to be a lot about this in the media and it won't be reported very well. So
Yeah.
it would say all small business owners. It won't mention the threshold, won't mention it doesn't cover companies or partnerships. So you need to understand it not only from the perspective of does it affect you, but also does it not affect you. So basically education, education, education.
Yeah. Yeah. And which comes straight back to my two pieces of advice. My first piece of advice would be to go on the Yogi Tax website and subscribe to your newsletter. So it's just yogitax.co.uk. Is that right?
That is correct.
Yeah, I'll make sure I put a link on that. And
Okay.
someone can subscribe to the newsletter on there, can't they?
That's correct.
And then in your inbox, as soon as we've had anything significant, whether it's the budget or anything like this, Jessica, you always write it in such a clear way with people like us in mind. So to get your news from Jessica would be my first piece of advice.
Okay, thank you.
And the second one would be, if you could take the headache out and use an accountancy firm, use Yogi Tax. I've been with you for many, many years, and you explain things, your team explains things well, and I'm no longer scared of brown envelopes because I just forward them to you.
Okay, on that note, Laura, at the moment, we've actually closed our books.
Oh.
We are going to reopen them shortly. At the moment, I think on the website it says we're reopening in February. It will be before that, but
Okay.
we need to change our intake flow a little bit. But we would do what we can to help people. I think that's the answer.
Yeah.
But at the moment, technically, the closed sign is on the door.
Yeah. Which just actually shows how good you are. But if you're potentially opening the books in January, February, that would still be in time for anyone that would be affected by the Making Tax Digital.
Yeah, that's
All
correct.
right. Thank you so very, very much for your time. I really appreciate it. I know you've got to rush off as well. So thank you for joining us for today. Any questions, just let me know. Otherwise, let's go make our tax digital.
Okay, thanks, Laura.